All right, good morning, everyone. Give us just a minute while we go live on all the platforms. Thank you for checking in the chat. Good morning.
All right. Good morning, everyone. Good morning. Good morning. Hello to everyone checking in on the chat. We'll just wait a few minutes here. Wait to get live on all the different platforms. So hang tight with us. Make sure we give everybody a chance to jump on before we get started. Hope everyone's having a good Friday. Happy Friday, everyone. Interested to see how the rates are looking today. Good morning. Good morning to all the mortgage calculator team. We're just waiting 1 minute here for us to go live on all the different platforms. All right. Looks like we are good to go. We are live. So let's go ahead and get it started. We can take the chat out of here. So, welcome everyone. My name is Kyle Hiersche. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. So we do this show every weekday at 11 a.m. Eastern so that we can view the actual rates of actual products and go through each product so you can compare the rates every day and see how they go up and down. So it's definitely very interesting. And then we do a deep dive topic every day into a different type of loan. And today, our deep dive topic is DSCR loans on manufactured homes. So Jose will talk about that a little bit more later. He actually has a quote pulled up to pull up an actual quote for a manufactured home for a DSCR loan. So we will get into that later. But first, Nick is going to go ahead and pull up our pricing tool, and we're going to go through the actual live rates for today. So with that being said, Nick, why don't you go ahead and take it away?
All right, thank you, sir. Let me go ahead and switch up my screens and we'll get started. So this is our live pricing tool for our mortgage professionals. Please get with our team members if you want a full loan estimate with all your detailed costs. We have over 350 loan officers, and we're licensed in 22 different states for primary and second homes. And we can do our business purpose DSCR, which is going to be our example here later, in pretty much every state. But let's go ahead and check out the rates for this morning. It is March 3rd, just after 11 a.m. Eastern. Our standard programs are live. And fortunately, the looks like the markets overreact a little bit earlier, so the 10 years actually down today. So I think we'll have some better results today. But let's check out some basic scenarios. We're always going to start with an 80 LTV. That's an 80% loan, 20% down payment. We're going to typically, for all our scenarios, use a 400,000 loan amount, nice and easy loan amount. We're going to set our desired price to 99. That means we will search for the best rate at one discount point cost. Most of our customers want to buy down the rate a little bit in this environment, so that's typically what we're asked for. And for the demo today, we're going to go through our conforming conventional rates. Then we'll go to our FHA options, and then we'll go into our expanded guidelines, aka non-QM, where we can do over 4,500 loan programs under alternative income documentation. And we are going to not go through VA or USDA. VA is only for our eligible vets. We appreciate your service. Please get with us. We can quote that in a few minutes, but not everybody's eligible, so we won't do that live. And same with USDA. That's only for properties in a rural area. If you are searching in a rural area, we can quote that up pretty quickly as well, but not everybody is. So let's start with our conventional conforming. purchase, 30-year fix, pretty standard terms, primary home, single family, 1 unit, Florida, Miami-Dade, since that's where our office is. And we will use an estimated FICO of 760 for all of our demos today, and an estimated debt to income ratio of 40. So let's go ahead and check out what our conventional rates are this morning. Get through the security. And just as expected, a little bit better than yesterday, I believe. So we were right at about 1 point here yesterday. A little bit of relaxation, hopefully later today and into next week. We'll see a little bit more relaxing of the rates. But right now, it looks like the best option we have here, 6.99 rate for 0.875 discount point in cost. And there's a bunch of other options here. Yeah, it looks like, or maybe a 7% rate with 0.75 would probably be what I would quote my customer. But lots of different options here. Please get with our team if you want a detailed quote here for a conventional rate. Since those are kind of increasing, what gets us a little more excited is what we're going to go over next, which is FHA, which does have some recent improvements. So let's go ahead and check out an FHA example, which is typically the next best choice. If a customer for some reason doesn't quite qualify for conventional, FHA affords us a little bit more debt to income and some other basically expanded guidelines on credit. So FHA is usually the next best option. So we'll go ahead and compare that here to our conventional. And as I mentioned before, just last week, there was an announcement for the mortgage insurance premium to be reduced for FHA. The government announced that. So it's not quite priced in. It starts later this month, but the upfront mortgage insurance will be reduced by a pretty significant amount. So these programs are even getting better. And you can see the rates are obviously a little bit lower. But it looks like the best option we have here would be a 6.125 rate for 0.625 in discount points. And as I always say on the show, make sure you check out the APR, especially because FHA has those upfront and monthly mortgage insurance. So always compare the APR to compare apples to apples. But FHA is getting better. I definitely recommend everybody do not discount FHA as a great option. But now if a borrower, for some reason, cannot qualify with either conforming or conventional, let's go ahead and slide up our last scenario. A lot of lenders and banks do not have other options. Fortunately, here at the Mortgage Calculator, we have over 4,500 programs under expanded guidelines, aka non-QM. So we'll check out an option here under our non-QM. We'll keep everything else the same so we can compare side by side. The one thing that pops up here when we choose non-QM is the type of income. So we can use full doc, which is what we use for FHA and conventional. But obviously, when we're going to non-QM, we love to use the alternative options. We can use 1 year out doc, 2 year out doc. We can use assets, which we went over earlier this week. We can use business bank statements, 12 and 24 months, very popular. For our investment properties, we can use our DSCR. We'll go over that in a minute. And our most popular program for a typical person purchasing a primary home is going to be a personal bank statement 12-month program. And that's typically going to be for our self-employed borrowers, because they typically, when you use 2 years of tax returns, have write-offs and other things that cause them not to quite qualify for what they may be able to actually afford. So we're going to use 12 bank statements. We're going to analyze those and determine a debt to income ratio using the bank statements instead of using their 2 years of tax returns. And typically that affords us the ability to approve our borrowers for more home or more money in order to more accurately reflect their cash situation. So these are great options for our borrowers, especially self-employed. And let's check out our bank statement options today. And here we have the combo up here, 7.75 rate for 0.625 in discount points. So you'll notice we're just not even quite a whole point above conventional here. So conventional was right at 7%. Right now, bank statements is right in the 7s as well. I believe we have a couple other options. Let me scroll down. There's just so many options with non-QM that we definitely want to scroll through here. And as expected, there is one option at 7.25 rate for 0.875 discount points. So tons of different options here. Very comparable to conventional, especially today. That's what gets us excited at the Mortgage Calculator. We love to do conventional loans, But as the non-QM becomes more viable, we love to be experts in alternative options. And as you see today, this is almost apples to apples with the conventional loans, which really gets us excited at the mortgage calculator. But you can see a ton of different programs here. Please get with our team. There's just a ton of options. Many of these will allow things such as credit events. So let us know if you have a tricky situation or a tricky borrower, and we'll go ahead and find the program that fits best for that situation. Now, before we pass it over to Jose for a deep dive on investment properties, let's check out the general investment property scenarios like we do every morning. So we're going to do a couple options for investment properties here. We'll pull up the same scenario we've been working with all morning, 80% loan to value, 20% down payment, 1 discount point in price is what we'll look for. And we're going to compare our conventional options with our non-QM options. So first we'll do our conventional conforming for those investors that may qualify for full doc. No problem. Let's see what the rates are this morning on a standard conventional investment property. Now, as we say every morning, there are additional, they call them loan level price adjustments that the government entities have added to these programs. So unfortunately, we're not able to find a combination with 1 discount point in cost. So the computer found a 7.125 rate for 3.5 in discount points. Unfortunately, we weren't able to find a higher rate option with lower discount points, which is typically what our investors request. So a lot of extra costs here that they've added. So we always want to give our investors alternative options. You see, if we go a little bit up in right here, 7.49, 2.875 in discount points. So a little bit of flexibility, but many times our investors want other options in order to save discount points, cash out of pocket, right? So we love to do conventional loans, but we always want to send all of our borrowers another option. That's why we love non-QM. So let's pull up our last scenario for today. We'll pull up our expanded guidelines options for an investment property. And now you see a couple new boxes. We have our income verification like we said before. So for our non-QM investment properties, our most popular program by far is our DSCR program, because that doesn't actually require any income from the borrower. So no income documentation from the borrower, no employment documentation. We're simply going to use the property estimated rental income in order to qualify that loan and determine that the rental income will typically cover the housing expense, right? The PITIA for the mortgage payment, and determine that ratio. So most of the times, if the rents will cover, that's a 1 ratio. We have tons of programs for that. And if it doesn't quite cover, we even have options for properties that don't quite cash flow for DSCRs under 1. So tons of options we have. Please get with our team to navigate that. And the other option we need to select here before pricing is our prepayment penalty. Most non-QM loans under investment properties will have a prepayment penalty standard. We can choose 0, but that will limit our loan options. So for our demo today, we're going to choose 3 years, which is pretty standard. And there's also a 5-year option if the borrower is going to hold the property for a longer time. We can always use that. But for our demo today, we'll use 3 years. And let's check out our DSCR rates this morning. So again, these are not that much higher than conventional that you saw. So 8.25 rate for 0.85 in discount points. So our investors love to compare these options. Obviously a little bit higher rate, but as long as the property cash flows, most of our investors are okay with that. So these are amazing options. You see there's just tons of programs that we have under DSCR that vary in the DSCR value that's required. You see here, vary with the prepayment penalty. So please get with our team. They'll navigate which one of these works best for your scenario. For example, some of these may allow short-term rental income, which we went over yesterday on the live show. And some of these may allow what we're going to go into next, which is a manufactured home for an investment property, which is pretty rare, right? Not many people are able to secure financing for manufactured homes, especially as an investment. So this is an amazing program that we're going to go into, which is a specific set of these DSCR programs you see here. So let me go ahead and change my screen and we'll get into the deep dive today. Give me 1 second. And I'll introduce the topic. So today we're going to talk about manufactured home DSCR. So as I mentioned, that's a subset of what you just saw on the screen. There's only a couple options that we have that do allow this, but that's very unique. Not many lenders or banks have these options. That's where we love to, again, give all of our investors and all of our customers many different options. So, Jose, why don't you go ahead and take it over and talk about how rare this is first, and then go ahead and get into your example.
Good morning, everybody. Thank you for joining us. Jose Gonzalez here, sales manager, mortgage calculator. Manufactured homes are very tricky, starting with just the terminology, because a lot of times when we're approached on a manufactured home deal, um, the word mobile home gets thrown around a lot, right? Customer has a mobile home, or I have a mobile home. Well, let's start with a mobile home is not a manufactured home. A manufactured home is, let's say, a mobile home that's permanently sits affixed to land and is titled like land. It's property. It has tax folio number, and it's permanently attached by the folio to a piece of land. A mobile home is titled like a car. It's mobile, not permanently affixed to land, does is not deeded to any land, doesn't have a folio number. It basically has a vehicle registration number. And it is only when it goes through the process of being attached to the land that it then gets deeded like a piece of land, folio number, and then you can do your property search and you can find it like you would find any other property. So that's the first point to consider, because many times people approach us again. Mobile home in a mobile home park looks just like a manufactured home, except it's sitting in a park where they are paying a monthly rental or lease amount to be able to sit it there, park it there. Actually, it's really what it is, park there, and for it to be able to use the utilities, water, sewage, and electricity. So, very important when you are sizing up the deal to differentiate between a manufactured home and a mobile home. Okay, so to recap, we only finance in our options manufactured homes, which is true real estate. So, with the groundwork being laid there, now, as Nick mentioned, manufactured homes are very difficult to finance in the non QM world, and especially in the DSCR world, where we're just using the cash flow generated by the property to qualify the borrower. Uh, Most of the manufactured loan options that we can consider are going to be agency loans. It's usually, and when it is agency, it's required. For example, FHA, you can do manufactured homes, but we all know FHA is primary residence only. Conventional, you can do manufactured homes, but it's going to be primary and second homes only. And when you do the refinance on the manufactured home, it is rate and term only, not cash out. So I say that because now in the examples that we're going to be showing to you, right, totally goes against the grain of what everyone thinks is possible. And that's the cool thing about working with and for the mortgage calculator, that we have all of these outside the box solutions that most of the other outlets out there are simply going to shrug their shoulders, not, go give you one of these. Oh, I think I know somebody. Well, we have options for you. So there aren't that many, but we have them. So in our first option here, where we're talking about a purchase of a manufactured home, DSCR, the main thing for our team and our investors to consider is that the loan to value obviously is not going to be the full 80 or 85%, because we can go in some situations up to 85% loan to value on a DSCR 1 unit purchase. So in our scenario here, you got to note that it's 70% is the max LTV on a manufactured home DSCR purchase. So as long as you're taking that into consideration, you will have options. One other thing to note for our team when you're pricing these out, you do have to price them out as a one unit and then be aware of the guidelines, because it is only when going into the guidelines of the conduit that we have for this option that you will note that there is an exception granted for the manufactured homes, but it is only up to 70% loan to value. So it is sort of an internal adjustment there that you all have to be aware of when you are searching for options. So in this situation here, we have a 70% loan to value, and we have the lowest cost option actually giving us a little bit of a lender credit, $88, and our loan amount here is $350, purchase price $500,000, and our lowest cost option, lowest rate option is we can buy it down to 7.875 at a cost just a tad under 3 points. So there's a good range there, 7.875 to 9.125. And mind you, when you're looking at this rate of an investment property and you look at the conventional rates of an investment property, you're not going to see too much of a difference on this purchase, a little bit of an LTV difference, but nowhere are you going to be able to approach what we're doing here, conventional, which is, manufactured home, DSCR. Okay, really good option. So that's 70%. And this is now, we have multiple options for this, right? This is the 1.0 best case scenario DSCR option. But what happens if your property cash flows a little bit less? Well, you got our 0.75 to 0.99 option. Rate goes up a little bit, but it's not so bad. We have 9.625 as the lowest cost option and 8.25% as our lowest rate option. But wait, there's more. What happens if your DSCR is below 0.75? Yes, we can do it. Here you go. Again, rate goes up a little bit, but still we're looking at 10.625% as our lowest cost option, and we still have a very good 8.625% interest rate, right? Lowest rate option there is still a very good rate. And now we have here, and I got the wrong title here, but this is actually a refinance here. Excuse me, hold up. Nope, got my title over here is correct. Excuse me. We have a refinance here now of a 1.0, so we can do cash out refinance. So this is, to recap, this was our 0.75, less than 0.75 purchase. Now, to let you know how cool this gets, we can do cash out refinances with the manufactured home DSCR. It's just, you have to be aware that the LTV drops to 65%. Still good option. DSCR 9.125 is our lowest cost option. 7.99 our lowest rate option. That's our 1.0 option. Cash out. And again, we have our 0.75 to 0.99 refi cash out options. 9.875 lowest cost rate. 8.375 lowest rate option. And we even have a cash out option if the DSCR, same 65% LTV, if the DSCR is below 0.75. So all of the options that we have available for purchase are also available for cash out refinance. The only difference is that there is a 5% LTV reduction from purchase to refi, and which you are normally going to find between purchase and cash out refi. There's going to be at least a 5% LTV reduction. So there's no difference in how this program treats that scenario. The only difference with this program is that this is for a manufactured home, DSCR. And in this case, it is a cash out refi. So 6 good options there for our manufactured homes. So this may be a little bit of a mind blower for some of our team out there that is thinking manufactured homes. You can't do that. So that's why we have our all our shows to enlighten everybody out there.
Beautiful. We got some questions here for you, Jose. These are good. There's one here. I don't know what she's referring to, but Amanda had a question. 20-year mortgage rules still apply for DSCR? These are all 30-year fixed, correct?
Yes, these are all 30-year fixed rates here that we're quoting. And yes, I also am not sure what the 20-year mortgage rule is for DSCR.
And then, Emily here. Is there property tax for a mobile home? That's what we went over earlier, but want to go over that one more time? Because there's probably some more people tuned in
again,
now.
The main thing I want to stress here is we have to be very careful with the terminology that we're throwing around, because if you're telling me, is there property tax for a mobile home, I'm going to tell you that's a non-question, because a mobile home is a car, basically. Just, it's a vehicle. It doesn't have a motor, but it has wheels. It's moved around, not permanently affixed to land. There's no property tax on a mobile home, because property tax is on, it has to have land and a structure, if there's a structure permanently affixed to it. So if it's a manufactured home, there'll be property tax just like any other home. If it's a mobile home, it's not real estate. It's titled like a vehicle, and there's no property tax.
All right. Here's a good one. Are there acreage limits? There definitely is. Do you know which the acreage limits are on that one?
Yes, the acreage. Well, here the acreage limits is going to be the acreage limits for DSCR. In this case, they just happen to accept manufactured home as an additional eligible property type. And they just add an additional, I guess let's call it an overlay of the LTV at 70% max, right? But the acreage limitation with this particular option has to do with DSCR, which is 2 acres.
Yeah. So most of our programs will have a 2-acre limit on DSCR, and then a 5-acre on a couple of them. And then if anything over 5 acres is usually by exception.
But that is program specific. I do stress to the team. So when you are questioning this, you need to go to this specific program. There is no universal rule for all DSCR. It is program specific. So please reach out to the specific guidelines that you're considering to confirm that fact.
On the same line, Sonara was saying exceptions with LTV. I don't believe there are going to be any exceptions really on the manufacturer, because it already is an exception, right? You're asking for an exception to an exception, right?
Yes. Yeah, so that's going to be like a double negative there. That's not going to happen.
Yeah, I wouldn't push the limits there, buddy. But maybe if you're like 1 LTV over, 1% over, maybe that's an exception. But they're not going to give you, 80% LTV like a regular, 1-unit single family property.
Let me touch base a minute, because I see Amanda added a clarification. I guess she's just wanting to know about are there, and I don't think it's really more like 20 years. I think she wants to know more like, are there age limitations?
That's what I was going to say. Can you talk about
manufactured homes?
The HUD plate, yeah.
Yeah. So in general, manufactured homes, and then this, you got to read into the guidelines of each option here to confirm how they're going to treat it, because again, it's program specific to each one. But typically all manufactured homes can't be any older than 1976, right? But then they do differentiate if it's a single wide or a double wide. If it's a single wide, then they're not going to let it go all the way back to 1976. That's where you got to go into the guidelines. Single wide, maybe a little bit closer to that 20-year type of limitation in age that you're talking about. But for that, you do have to go into the guidelines specifically. There are other property specific requirements to a manufactured home, like there are the HUD Decal plates and the HUD data plate, HUD, HUD, right? So the decal, because each typically a manufactured home is brought to the site in two pieces, right? Each piece in one of the corners has a plate, a metal plate. They call that the HUD decal plate. And that basically has the serial number of the unit, all that kind of stuff. And then we have to be able to verify the data plate information on an appraisal. If a data plate is not physically able to be located, usually with the serial number of the manufactured home, there is a service that we can reach out to, and for a nominal cost, we can obtain both letters because there's going to be one letter required for each plate because there's two of them, one on each side of the manufactured home. And then the data plate, which is an additional plate, which is usually inside, it's inside the property. They'll put it like inside a cupboard or something like that. If that plate is not able to be located, then that also has to be ordered from this service for an additional cost as well. And then, that's just to verify, year built and all that kind of stuff. So those are two requirements that you're not going to be able to close your loan without verifying the information on those plates.
All right, there's a couple other ones here, guys. About manufactured age of the client. So yeah, we don't have any restrictions. Remember, these are investment properties, right? So there's two other questions on this, right? So we're non-QM, business purpose. This is a commercial loan. It just acts and feels like a regular loan, right? So remember, DSCRs are basically a business purpose commercial loan that just are 30-year fixed, so they just look and feel like a regular home loan, right? But they're definitely not going to be subject to an age rule, like you're saying here for a client. Or let's pop up this other question, Jose. Looks like
Yeah, because that one there is no age restriction on the client. There's
correct
age restriction on the property, but not on the
correct.
client, and that's 1976. And I'm not really aware that there is an amortization limit on manufactured homes. That could be a lender specific overlay, but in the general Fannie Mae and Freddie Mac and the FHA guidelines, that we're going to be talking about those, there are no like you got to reduce the amortization or anything like that. That could just be overlays that are being added by specific lenders.
But to touch on again, DSCR doesn't apply to any of those
Correct.
conventional, TRID. Remember, this is a commercial loan, so it's not going to apply to any of those rules that you guys are kind of probably thinking of, right?
Correct. You'd have to specifically delve into the guidelines of this particular investor and then make sure that the loan conforms to the property requirements.
Here's another good one. These are good questions, guys. Thank you. The deactivated title, can you go over that? That's where they convert, correct? So you want to talk about how it converts, right, Jose?
Right. Well, there should be a document if they ask for it. I mean, there is some document there which title can obtain for you. They usually do this as part of their title search. There should be a document showing when it converted over from vehicle to actual titled land, right? So if you do need anything like that, reach out to the title company, because when they do their whole title examination and all that, that's one of the things that they themselves, if they're going to insure the title for that specific type of property, they have to obtain all those documents from public records. So that would be your best source to obtain it.
Another good question that does cause some confusion here. What's the difference between a tiny home and a manufactured home?
I mean, a tiny home is just a tiny home. I mean, manufactured home. I mean, let's say a tiny home could be a manufactured home if the manufactured home was small enough, because a tiny home could be manufactured as opposed to to site built. That's really the difference here. Site built does not mean that it's concrete and block and stucco. Site built just means it was built totally on the site, whether it's frame, whether whatever it is, whereas a manufactured home is usually built at a factory, and they bring the two pieces apart and they finish the assembly on site, and then do whatever they got to do to close the deal. So
two very different things, right, Jose?
yeah, so a tiny home is usually going to just be a site built home that is just smaller, and at that point you don't really have to, you shouldn't even really look at the phrase tiny home, because now you're categorizing something that just has to do with the size, the square footage of the structure. That's all you really got to look at. A home is a home is a home, whether the only difference is it's site built, right? Meaning any kind of site built structure, or is it manufactured where it's built at a factory and then the two pieces are put together, which also brings a question of modular home, right? I mean, we get modular homes where people are confusing modular homes with manufactured home. Modular home is just meaning that you have a bunch of pieces pre-assembled, and then they bring all those pieces to the site and they assemble it on site. But that's not, let's say, a manufactured home that's fully built at the factory, and then they just put two pieces together at the site. Where it could almost be considered, mobile home until it's put on the site, then it's a manufactured home. The modular home is modular. So when you do have modular home and you're inquiring about it, don't ask about it in the same way you'd ask about a manufactured home. You specifically have to state that it's a modular home. And then what they're going to tell you is, well, we need to see it, right? They need to see if a modular home looks exactly like any other home, then there's no problem. It's nothing out of the ordinary. But if the modular home all of a sudden looks like some kind of a weird home that nobody's ever seen, maybe they'll consider it too unique.
Like an octagon home or a dome home or one of those weird things, right?
Yeah, they may consider it too unique, and then they may not want to do it. So don't confuse modular with manufactured. Real important there.
Let's do one more question here just to clarify, guys. Investment property loans are for investment properties only, right? So yes, a DSCR is for investment property. It's a commercial loan for operating an investment property as a business purpose commercial loan. That's what a DSCR is. It has no employment, no income, no primary occupancy, no secondary occupancy. It's strictly a business purpose loan for investment properties. Yeah, I think we're good there. I think, Kyle, you should end it here. We could go all day on the difference of manufactured. It's super confusing, guys, but please get with us. If you have something you want to quote, we can quote it up real quick. But, it's property by property, so we could go all day on different I see someone talking about shipping containers in the chat, and man, it gets deep, right? So
it can get crazy. So if you are a loan officer, you are, some of the people in the chat, obviously loan officers, that you get a lot of questions about this, right? That's why everybody has a lot of questions. These type of things are very difficult to finance. You're going to run into that, a lot of clients wanting to finance these things. So it's important to know what, as Jose said, what a mobile home is, what a manufactured home is, what a modular home is. But if you have any questions, you can contact us. If you are an investor or a client or a realtor out there and you want to get in touch with one of our loan officers that can help walk you through this, you can visit us at themortgagecalculator.com, and we can pair you up with one of our loan officer consultants. We have 350 loan officers all across the country, licensed in 22 states, and these DSCR loans we can do in almost every state. So go ahead and get with us at themortgagecalculator.com, or you can send us an email, info@themortgagecalculator.com. So it's a great topic today, lots of questions. If you need any more info, feel free to get in touch with us. And we do this show every single weekday at 11 a.m. Eastern, where we go through the rates. You can see what the rates are that day. And we do a deep dive into a different topic like we just did today with the manufactured home DSCR loan. So thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. Thank you, everyone, for the questions. And we hope to see you all Monday at 11 a.m. Eastern time. Everybody take care. Have a great